Today I'm going to talk about reps and warranties insurance with a special focus on the small business market and why it should be on your radar if you're an M&A advisor. Okay, a quick primer on reps and warranty insurance, which is often called R&W insurance. This form of transactional liability insurance is used to cover the indemnifications made in a deal that can lead to disputes and litigation post-close. R&W insurance is essentially breach of contract coverage, which can replace indemnification agreements and escrow holdbacks at closing. It's been used for years in the middle market by both buyers and sellers to help smooth out transactions and is now available in the small business market. Previously, sellers of small firms were left out of this form of insurance due to the high cost of underwriting fees and premiums. Today, small businesses, which are those with an enterprise value of $15 million or less, can purchase R&W insurance quickly, affordably, and easily, which is why I think M&A advisors should have it on their radar. Why should sellers consider R&W cover? Two reasons stand out for me. The first is peace of mind for the seller. If the threat of litigation arises due to misrepresentations or breaches of contract, the seller has an insurance company behind them to provide vigorous defense and potential settlement amounts, safeguarding the seller's capital. Entrepreneurs often fear that larger buyers can come back after a year or two after closing and threaten them with litigation if they're not happy with the performance or the results. R&W transfers this risk to an insurance company. Second, with R&W coverage, the need for an escrow holdback is reduced or totally eliminated. The seller walks away from the closing table with all their proceeds in their pocket to invest or start another company. Leaving 10 or 20% on the closing table often feels like the seller is being held hostage. To help smooth out a deal, give the exiting seller some peace of mind and all their money at closing at a reasonable cost, I think R&W is a good idea for your clients to consider. What does it cost? Premiums range from 1 to 3% of the limit of coverage purchased. There's no upfront underwriting fee, and quotes are turned around in just a few days with just 9 questions answered. It's pretty simple. One thing worth mentioning is the net cost of insurance. And what I mean by net cost is that when R&W eliminates the need for escrow, those escrow funds can be invested by the seller for gains and the opportunity cost is reversed. Here's an example. Assume a deal worth $10 million purchases R&W insurance for a premium of $150,000, which equates to a rate of 1.5%. The original deal's escrow of 10% or $1 million is eliminated and now is invested by the seller at a 10% return. They make a $100,000 gain on that escrow. Subtract the premiums and that means the net cost of this insurance is only $50,000. Now, I know this is a bit oversimplified, but I think it's an important consideration. How can a seller get a quote? Well, let's have a conversation. I'll get some details and I'll submit it to underwriting. As I mentioned, it only takes a couple days to turn around a non-binding premium indication. If that looks good, we'll get some additional underwriting information to get a firm premium quote, and that only takes another couple of days. If you're in a rush, it can be moved along a lot faster. Premiums are paid once at inception and the protection lasts for 6 years. Have other questions I didn't answer here? Let's connect. My contact info is coming up, and in the description box below there's actually a link where you can book a call on my calendar. I'd love to hear from you and see if this product is a good fit for your next deal. Thanks.